Randy Smallwood of Wheaton Precious Metals. Always good catching up with you. It's been too long.
And a pleasure, Daniela.
Yeah.
Always a pleasure.
A lot to catch up with you today. As you know, the gold price has spiked from $1,250 to $1,500 this year, which has been obviously a game changer for the precious metals industry. But gold rallying on the back of lower interest rates. We have a Fed meeting on Wednesday. There's talk of even the U.S. headed to negative interest rates. So what gold price are miners working with now? What are they factoring in?
Well, I don't think the more conservative groups out there will still have a conservative number behind that. They won't chase that growth, that frothy opportunity set on a go-forward basis. It's always tough chasing a trend, and so I don't think anyone out there that's building good solid foundations, they're not going to use any prices higher than the spot price. But I have to say the momentum is definitely in the right direction, and what it does is it increases the momentum in terms of closing transactions or acquisitions, because at least on a spot price transaction, if you're fairly priced, you've got that upside potential, and the momentum is going in the right way.
Let's talk about that momentum, because last time we spoke, which was a couple of months ago, right. And I had asked you a forecast for gold, which I know you don't really typically like doing,
yes.
But you said, look, we'll be comfortably over 1,400. So kudos to you. Here we are, comfortably over 1,400, over 1,500. How's the momentum looking to you now?
It's looking very good. You've got a president here, and to me, one of the most important factors in gold is the U.S. dollar. And you've got a president here in the United States that wants negative rates. Gold is already setting record prices in so many currencies around the world. It's only a matter of time until it sets record prices in the US dollar, because that's what we're seeing, is to drive growth, to drive stability. These fiat currencies are all pushing their way towards lower rates and just increasing the attractiveness of gold. And so I know that precious metals are going to go higher. It's always a matter of the timing and when it happens. But this is a trend that there's nothing on the horizon that will reverse this trend.
Taking us back a few years when gold went from 1,900 to 1,050 in the span of 2011 to 2015, obviously miners had changed their focus. They were cutting costs, cutting production. Cash flow was really generating cash flow was really the main focus. Has that now changed, or is cash flow still king?
Well, cash flow's king. The balance sheets have been repaired. There was a lot of stressed balance sheets that actually opened up a lot of opportunities for us, and it wasn't only in the gold space, but in the diversified mining companies around the world. It opened up a lot of balance sheet repair opportunities. But most of them have been substantially repaired now, and so people are still building a foundation now. As we've said, spike. I actually think this is just part of a long-term trend, and so as balance sheets get a little bit more robust and a little bit more capability, that's when the mining companies are going to start trying to fill those holes that they have in their production profiles. You look at most companies, you look 5-10 years out, they've got substantive holes in their production profiles, and they're going to need to find ways to fill those holes, and that's going to come. That's where the growth is going to come from.
Randy, do you think we'll see miners start being more generous with shareholders with this newfound wealth of prices? Will we see more miners pay out dividends?
As I said, the challenge is they've all got, the bulk of them all have production holes about 5 to 10 years out, and they've got to spend money. It's been so long since the industry's invested into itself from a growth perspective. It's been survival mode for the last 5-6 years. I think capital is going to go back into the ground to try and make sure that we fill those production holes first before we start seeing any substantive increase in dividends back to shareholders.
I think with the mega mergers we saw last year, a lot of mid-tiers were excited that, hey, maybe they could scoop up some deposits, good projects for cheap.
Yep.
But since then, Newmont and Barrick have both hinted at the fact that, hey, we're not going to let go of any assets at bargain basement prices here. Has that burst the bubble of the mid-tiers now?
I don't think so, because I think there's still, within the mid-tiers and the single asset companies, there's still a lot of good opportunities. And certain markets have more strength than others. The Australian market has shown some real strength. And I have to tell you, I've just came from Beaver Creek.
Yep.
There's a bigger contingent of Australian companies there than I have ever seen.
Absolutely.
And so they've got a market that's much more supportive of them than what we're seeing in the rest of the world. And so that's an opportunity, that's an advantage for the Australian companies. And we're seeing a lot of interest in looking at some of these other ones. So I think that's what we're going to see over the next while. It's not going to be so much buying the spun-off assets, the broken assets of the big companies. It's going to be combinations like Santa Barbara and Atlantic Gold and along those lines. That's what we're going to see a lot of over the next while.
let's talk silver, because I went back to the tape last night, and last time we spoke, you had mentioned that silver had better fundamentals than gold.
Yes, it does.
The gold silver ratio is still very high, as you know. We're still waiting on silver's time to shine here. It's having a good day today, but if we spoke Friday, it was not.
Yep.
It would make the case for silver.
Sure. If you sit back and look at the last 6 months, silver's gone from $13 to $19. Gold from $11.50, or well, a little bit longer than that, $1,200 to $1,500. There you go. There's the percentages right there. Silver always outperforms gold. It's got a higher beta. You go back over 40, 50 years of history, gold always starts moving first, and silver lags, but then it outperforms, and we'll see that. And there's better fundamentals behind it. It is more than half of silver is actually consumed in high efficiency electronics and in antibacterial applications and all this. It gets consumed.
Right.
And so if the investor space in silver ever wakes up, we're going to see a flip in the gold-silver ratio back down to some more normal levels than what we're seeing right now. The numbers are almost record highs in terms of that.
But Randy, is there just too much silver out there?
No, I think I think silver itself is, because it's a higher beta and it's also a much smaller investing space than gold. That I think the investing space is probably a little bit thinner in there, and what it has to do, it still is treated as a precious metal, but it's gotta create that sparkle and bring back the investor, and that's what silver's missing right now. Is it just doesn't have that investor sparkle. It doesn't have that demand. That's going to come when people start seeing gold move. It's going to bring people back into precious metals, and they're going to look at gold and they're going to say, well, what about silver? Wow, silver looks pretty attractive, and that's what'll kickstart silver.
And a lot less expensive to buy and invest in, right?
Yes.
Okay, let's talk Wheaton Precious Metals, because fresh news coming out this Monday morning.
Right.
You have signed or entered into some sort of agreement, partnership with the UN Global Compact. Tell us about this.
Well, so our company has always been about investing back into the communities. We're unique in the streaming space in the sense that we actually invest into the communities around our mine sites. It's an important part of maintaining a strong social license that all mining companies need. And so we support our partners in this whole thing. So sustainability is very, very important to us. And of course, last week we were part of the World Gold Council, so we signed on with the rest of the World Gold Council in terms of the responsible gold mining principles. But we felt that there's a requirement even a step beyond that, and that comes in the form of the UN Global Compact. There's over 9,000 companies that have signed into this, and it's a commitment towards sustainability practices and just bringing benefits back to all stakeholders that are involved in these projects. And so,
mining companies do enough of this, of giving back?
Well, not all mining companies, but I have to say the mining industry is at it's in a special position in the sense that it can actually deliver back value and good returns to rural areas, and that's one of the best advantages. Some of the most underprivileged and challenging areas in the world are these rural areas, but that's where we find the mines. And so we've got a unique position to be able to deliver that value back to the areas that need it the most.
Why is that so? Because I've known you a long time, and it's always been so important to you. Where do you think that comes from? Was it
the fact that I'm a human?
No, but I think it's. But a lot of people are good humans, But for you, it's really like a top priority.
Well, I mean, for me, in the streaming space, I come from the mining space. I've operated there. I understand how important it is to make sure that you leave a lasting benefit to the community that's most impacted by your operations. And I recognize that I'd love resources, I'd love mines to be able to operate forever. They don't. Resources eventually run out, mines eventually exhaust themselves. So you have to make sure that you leave a sustainable benefit afterwards so that the community is in a better place than it was before the operation was forward. That's a requirement. If you don't deliver that, then mining will suffer, right? And so you have to do your best to deliver that back to society as a whole. And so a commitment on that space, and so we announced this morning the UN Global Compact. That just reiterates our commitment in terms of maintaining high sustainability standards. We're the first of the streaming companies to step into this space. I encourage the others to follow suit because we all need this as part of an industry to be healthy and prosperous.
What are your goal plans for 2020 as we're about to wrap up, three more months of 2019 here?
Where did it go? At current prices, current commodity prices, Wheaton is generating over $700 million in free cash flow. we're constantly looking for ways to put that into the ground, and hopeful that we do close some transactions. But if we don't, we chew it against the debt. We have a very healthy dividend that delivers a reasonable yield back to our shareholders, and we'll just put it to work.
Well, Denver Gold is known for a lot of deals getting made at this conference, so
fingers crossed.
Fingers crossed. Randy Smallwood, thank you so much for joining us.
A true pleasure. Thank you.
And thanks for watching. We'll have much more for you. We're just starting our coverage here on Kitco.com.